In this video, we are going to learn how to solve these JAMB economics problems under financial institutions. So guys, this video will be an introduction to financial institutions. So let's get started. The first question I have here says, the primary objective of the NDIC is to have option A, give protection to bank depositors, provide regulations guiding the finance houses, give protection against fraud, give protection to the CBN against fraud. So the right answer is option A, which is to give protection to bank depositors. Very important, guys. Okay, the next question is this one. It says the major function of the money market is to stabilize domestic prices, provide funds for short-term financing, stabilize the value of the local currency, provide funds for long-term financing. The right answer is option B, which is to provide funds for short-term financing. Very important, guys. Okay, next question is this one. It says in the money market, money can only be borrowed for real capital projects, public utilities. Short-term, long-term is short-term, guys. In fact, once you hear the words money market, what should come to your mind is short term. Okay, in economies, once you hear money market, what should come to your mind is short term. Okay, next if the question in this one, it says for a firm, value added can be defined as the difference between the real value of its outputs and the cost of production, value of its outputs and inputs purchased from other firms, total revenue and total cost, input prices and product prices. The right answer is option B. Alright, so for a firm, value added can be defined as the difference between the value of its inputs and the value of its outputs and inputs purchased from other firms. Okay, the next question is this one. It says the downturn in the price of shares on the stock market is a highlight of real consumer rationality, efficient allocation of resources, the regulatory nature of the market, the invisible hand. The right answer is option C, which is the regulatory nature of the market. Okay, very important. The next question is this one. It says the monetization policy of the Nigerian government is aimed at encouraging public servants to retire early and become self-employed, transferring government properties to retired public servants, helping governments recover properties held by public servants, reducing government burden on the provision of fringe benefits to public servants. This is the right answer, guys, option D. Okay, the next question is this one. It says institutions serving as links between surplus and deficit units can be identified as we have tax offices, acceptance houses, financial intermediate, pension offices. The right answer is option C, which is financial intermediate. Okay, very important. The next question is this one. It says the money markets, again, money market, what should come to your mind short term, is a financial market that specializes in the provision of real venture capital for development projects, long-term loans, no short-term loans, medium-term loans. So the right answer is option C, short-term loans. Next question is this one. It says in order to develop the banking habit of rural dwellers, the traditional money lender should be legalized, heavily taxed, subsidized, prescribed. The right answer is option C, which is subsidized. Next question is this one. It says in the money market, again, money market short term, money can only be borrowed for real capital projects, short term, public utilities, long term. So it's obvious option B, short term. The next question is this one. It says a capital market differs from the money market in that in the former, that this capital market, the percentage of interest charge is more, loan repayment is guaranteed, loans sought is short term, loan sought is long term. The right answer is option D. In capital market, loan sought is long term. Okay, so we can invariably say that the difference between the capital market and the money market is that in money market it deals with short time period, while capital market deals with long time period. Okay, the last question for end this video is this one. It says life insurance companies contribute to economic development by holding a part of their assets in money market instruments, equipment, cash, and near money long-term financial instruments. So guys, the right answer to this question is life insurance companies contribute to economic development by holding a part of their assets in long-term financial instruments. So the right answer is option D. This is basically how you can deal with problems involving Introduction to Financial Institution for JAMB Economics practice with 12 questions for this topic. Hope you learned something interesting from the video. Let's go to the video, and guys, if you are new to this channel, ensure that you subscribe to this channel by hitting the subscribe button for more of these videos. Also like, share and comment on this video. If you for what I learned from this video. If you seem to have any specific question to ask regarding what I talked about in this video, feel free to leave a question in the comment section below, and I'll ensure to give you a response. Also ensure that you're part of the channel membership by clicking the JAMB button to help getting people information and help with yourself in your SNE exams like your JAMB and other SNE exams you'll be writing. Okay, having known this, click on the next screen above, and I will see you in the next video. Thanks for watching.